What's going on, guys? So in this video I'm going to be going over how do you know which fair value gap to buy and which not to buy, okay? And this is a loaded question. This is going to take more screen time than you're going to kind of think, okay? So I'm going to start off with the basics. So when you're in a trend, let's say you're in an uptrend, okay? Let's say there's a fair value gap, okay? Let's say we get a higher low right here, okay? And there's a fair value gap here and here. Okay, so this is kind of the basics. So why would you not take the fair value gap in here? Well, it has to do with discounted premium, okay? So if you draw the fib from the swing low to the swing high, okay, let me just take this 0.705 off. Discount is below the 0.5, premium is above. And when you're longing, you always want to long a discount, which would mean you want to long under the 0.5, okay? And you always start from the swing low to the swing high and the leg that the fair value gap is created. So sometimes when you see these fair value gaps, you're gonna see us bounce off them, okay? And you're gonna be like, well, why didn't we hit the one at discount, okay? And sometimes in this situation, this means on, let's say, the bigger time frame, you might already be in a discounted zone. So if we draw the fib on a bigger time frame and we're in a bigger trend in itself, okay, this is getting a little messy, we might already be in a discount zone in itself. So by the time you get to right here, this would be in premium, but on a bigger time frame, it'd be in discount. That's why we sometimes bounce from the fair value gaps in premium, okay? And again, this is going to be up to your rules. I personally don't like taking these. It depends on if there's like equal highs or equal lows above. Sometimes I'll take a position here that if we get to this one, I'll average down. Or let's say there's like a breaker, or not a breaker. Yeah, if there's like a breaker block over here, but not one down here, and there's like an order block supporting it, then I'll take this one right here, okay? So this is kind of the basics. So most fair value gaps you do want to take should be in discount, okay? The ones on premium you do not want to take. So I'm just going to show you a few examples. So earlier, okay, if we look at this leg right here, so we hit sell side liquidity, okay? So you can see we took out stops, we completed the sell model, okay? And look what happened. We get displacement up, we break this last lower high with displacement. Here's your market structure shift, and now what do? You look for the fair value gap premium. And technically, this whole leg is from here to, I would say, here, okay? This is the whole leg, right? And you can see this fair value gap isn't premium. But if you're really trying to dig deep into these scalps, then what I would do is I would look for like an order block with a significant swing low. So this is an order block, okay? You see this order block with this giant move up, and then you see an obvious high form here. So personally, I would draw it from the leg where the fair value gap is created rather than the leg of the whole move itself. And then I draw it up there, okay? So what happens? So you can see in premium we have no fair value gap, but in discount we do. What happens? We hit this fair value gap and then we ended up retracing. And then same thing here. This is kind of a confirmation, okay? And again, you start from this leg, draw it up to this high. At the time, it would actually be this high right here, okay? And what you can see is we bounced at the 0.5 twice. So we create buy stops here, then we go into those buy stops in reverse, and this would be the target. And in this situation, okay, we never actually hit this target. So I took a demo trade here, and you can see in my executions, I don't have executions turned on this one, but I took a demo trade here, and I got stopped at break even, okay? So what does that mean? Well, it was a good trade, but the take profit never hit. So what this means is I was like, okay, well, now I got equal highs, okay? So if you were looking at this from a retail perspective, you'd be like, okay, these look like equal highs. This is where the market might want to target later. And I ended up taking a 350% options trade, okay? I got it down here, and I sold all the way up here. So this is a setup that usually works 9 times out of 10, unless something like this happens, but then we just end up hitting it later, okay? But 9 times out of 10, will work. This is a good fair value gap and discount, and that will work, okay? And again, you want to take fair value gaps after you hit liquidity, okay? So if I were to draw this fair value gap right here, okay? Let's say we hit liquidity, and let's say we retrace a little higher at this point. Would you short this fair value gap? Okay, if you think the answer is yes, you're wrong. If you think the answer is no, good job. Okay, no, you would not short this fair value gap. Why? Well, we completed the sell model, which basically means we hit the low from 9:30. We hit the low day, and after we hit like a major sell side liquidity, you can see if we look left on our chart, there's like no other liquidity down here, besides this low down here. But we also had a fair value gap in the way right here. It was a tiny fair value gap, but nonetheless, on the 4 hour, we're still holding a 4 hour fair value gap here. So we're still holding this, which still makes us bullish. And it's also a 4 hour order block right here, as you can see. So if we go back to the 1 minute, I'm going to keep this fair value gap and order block on my screen. What happens is we hit sell side, okay? And why would you want to re-short a fair value gap after hitting sell side and bouncing off a 4 hour fair value gap? You wouldn't, okay? You expect these fair value gaps to get squeezed through, okay? And what that means is they know a lot of good traders want to, the algos like know, and the market makers know a lot of good traders want to short this fair value gap. I'm going to say algos because they're the only one making these. But they have a feeling. Let's pretend they had a brain. They'll be like, oh, a lot of people are going to short here, so let's use these sell orders with these big sell stops right in this fair value gap to squeeze through. Okay, so if we end up hitting that, no, I would not take that short. And sometimes, and also the reason I'm saying this is because we hit sell side liquidity and we were bouncing off higher time frame fair value gap. That's why I would not take that short. Okay, if we hit this and we did reject off of it, I don't care. I still wouldn't take it short. You're going to see sometimes where we hit sell side liquidity, you're bouncing off higher time frame fair value gap, we hit it, and then we reject, you're going to be like, oh, that worked. Okay, but then there's going to be other times where this doesn't work, so you just really have to be careful with that. Okay, and what ended up happening was we end up hitting it, okay, and you can see how we end up hitting it, we reject a little bit, and then we just go over it, and it looks like it's not even there. Like if you did not have a zone here, it looks like there's not any zone here, so this is just invalidated this time. And you can just see we squeeze kind of right through it, okay? Okay, so using what I just showed you, okay? I'm going to try to do this real quick. I wish I had rewind. I'm going to get TradingView Pro soon. Okay, using what I just showed you, would you short this fair value gap right here, okay? Okay, would you short this? Okay. If you said, if you already looked and you already know and you said no, okay, then good job. But if you truly didn't know and you thought yes, well, I'm going to explain to you why we would short this. So again, it's the same thing with up here. Because we hit sell side liquidity again, we re-hit sell side. Okay, we re-hit sell side. We're still in this fair value gap, and we just set the order block, okay? What you notice is we're still in a buy model, okay? And what this means is we're bouncing out of order block, higher time frame order block, higher time frame fair value gap. So to complete the initial buy model, this would be my target, okay? And this was actually this was the options trade I took, okay? And if you can try to guess by looking at this where I entered. Okay, do you see an entry somewhere in here? If you guessed here, you were correct. Okay, so up until this point, I'm not totally sure if this is a buy model yet. And then I draw this fair value gap just in case. You can see we just barely reject it. Okay, but then what happens? As soon as we get this candle squeezing through this fair value gap, okay, I'm like, okay, we got these equal highs up here that weren't hit earlier. We got a nice volume candle, nice squeezy candle right here with a fair value gap. So at this point, I'm thinking to myself, okay, this looks like a good entry to this target. And what happens to a lot of new ICT traders is they're too busy looking at the left side of their chart. They're not worrying about where liquidity is, like equal highs or equal lows. And what happens is we first reject this initially, but then we end up just bouncing out this fair value gap, and then boom, we squeeze through. And I ended up getting stopped out of my first option trade. But really, like, I didn't get stopped out because it never went below the stop loss. So the stop loss down here, but I actually stopped at the options trade because I knew it was lunchtime, and then I re-entered somewhere over here because I was okay, this is enough accumulation. I bet you were gonna squeeze soon, and then I got 350%. Okay, so this is just stuff you got to look for, and you can't be shorting fair value gaps. I have a rule: you don't short fair value gaps with equal highs above, and you don't long fair value gaps with equal lows below. Okay, so like right here. What was below here? Equal lows. Okay, so we have equal lows below here. And what happens? We have a fair value gap right here. Okay? As soon as you see this displacement under this low, okay, you don't know if you're going to bounce here or not, but I had a hunch we wouldn't because of these equal lows, okay? And I even had this fair value gap marked on my chart, right? But why would you not take this fair value gap? Even though I was live trading, I had this fair value gap marked, and I'm like, guys, you're not just going to slap this fair value gap automatically. What I do is, if the bias is truly bullish and we truly do want to hit this 4,186 level again, okay, then what do? Well, you mark this fair value gap, but you're not going to slap long. What I do is, when you get in the fair value gap, you want to look for something like this. A lower high, and then maybe a higher low after, maybe like a, not a double bottom, not equal lows, because that would be bearish, but maybe a little higher low. And then I want to see displacement over the high, and then boom. Here would be my entry, here would be my target, okay? So because we didn't get that inside this fair value gap, you don't enter there. Okay, this is only what I do if I'm not sure what the bias is. So if I'm not sure, I wait for confirmation on a fair value gap. I'm not just going to slap it. If I am sure, okay, so like right here, I saw this fair value gap, right? And I saw these equal lows right here. See these equal lows? And I saw this fair value gap. So I was pretty sure about this bias, and this was enough risk for me to slap it. But I was pretty sure we're going to go hit these equal lows, okay? Even right here, I said to my live, I'm like, okay, I'm gonna try short here. Why did I say this? Well, after we hit these equal lows, we got this candle. I'm like, okay, now this is starting to look pretty bearish because this is a pretty significant dump. Even after this candle, I'm like, okay, I'll try a short here. We never got it. We end up getting another small short here. I was like, okay, this is definitely bearish, and then this candle kind of confirmed you're in the sell model. Where's the target? Down here, okay? So you really have to pay attention to, did we take out liquidity? Okay, in this situation, we did. Okay, so you can see we took out buy side here, and that's exactly why you wouldn't long something like this, because we took out buy side. And you can probably see a lot of people probably got wrecked taking this because they're like, oh, fair value gap, we're probably going to hit these highs. But you really have to pay attention to internal buy side, because this was such an obvious high at the time. I was like, okay, I would be cautious of longing up here. I knew we had this order block up here. If we look, we never broke mean threshold of this order block, okay? So if you draw a fib from this open to the close, we never broke the mean threshold, okay? That's something to pay attention to. We just top ticked it, okay? And see to the almost cent. It was actually to the cent. So we never went above the mean threshold of the order block. Then we got to do a displacement down, okay? I'm sure we got an SMT somewhere between one of the indexes, but yeah, so that's kind of that. I'm just going to go over one more example. So again, with this, if we draw a fib from swing low to swing high, right? Where's discount? Discount was under the 0.5. That's where you want to take the fair value gap. We know there's a fair value gap above the 0.5. Okay, and we bounce off of it. But we're not longing this, okay? We expect it to come to discount. That's the only time we're longing. Okay, so what happens? It comes to discount. We bounce. Okay, we come, and then we end up inducing. We come to this fair value gap, then we bounce again. So this is kind of a tricky one. If you longed here, you probably would have been stopped, but then you would just relong there. And the reason why I like this one so much is because I saw this low resistance liquidity forming, which is kind of like a trend line. And the fact that we bounced off this with such great strength, okay, and we took out sell stops here. See how we took liquidity? We took out, or buy stops, I mean, see how we took buy stops? That would not want to make me take this fair value gap, okay? So we took liquidity, we took sell side. So when you take sell side, why would you want to short fair value gap? When we take sell side, usually the target is higher. Okay, so this was my target for this trade. You can see we went right above it, and then boom, like you just absolutely almost top tick sell. So now that we hit this, okay, would I take this fair value gap? No, I would not. Why? Because we already hit buy side liquidity. Okay, this is internal buy side. Yeah, maybe we do have more buy side liquidity up here, okay, but because we hit this internal buy side and we didn't get enough displacement over it, I'm not really interested in longing this fair value gap now that we hit buy side liquidity. So I'm just kind of, I will draw this on my screen, okay, so I will draw this out, and when I do draw this out on my screen, okay, I will look for a confirmation setup off of it, but I'm not going to slap it because this is only if you don't really know the bias. Maybe I thought we were going up here, but I wasn't too confident. Then I'll draw this on my screen, see if we get a bounce out of it, maybe a higher low, and then a displacement out of it, like a huge displacement, and then I long the retrace, and then I target up there, okay? So that's kind of me waiting for confirmation, okay? So, again, this is kind of a rough lesson in what fair value gaps you would not take. Again, see how good this fair value gap looks, but we end up squeezing through it. This is because there's liquidity above. There's equal highs above, okay? Where does the market want to target? It wants to target liquidity. So no matter where the fair value gap is, liquidity will always trump fair value gaps. And you can already see we took out sell side, okay? So I'm going to write down what to write in your notes. So do not take FVG if we hit liquidity, okay? There's equal highs or equal lows, or no displacement, okay? No displacement, it's another important one. I'll just go over that real quick. So this is my rules. I do not take a fair value gap if we hit liquidity already. So like right here, we hit sell side liquidity, so I would not short this. There's equal highs or equal lows, so even if we didn't hit liquidity here, but there still is equal highs, I still would not short this. Or there's no displacement, okay? So I would argue there is decent amount of displacement under this low, not really. But if you go to a fair value gap such as, let me see, like this one right here, okay? See how there's not really any displacement above there, and then we just dump through this tiny fair value gap. Also, the fourth one is you want it to be in discount, okay? This is not a discount. If you draw it from high to the low, this is not a discount, so why would you long that anyways? But you can see there's no displacement. This fair value gap shouldn't work. But yeah, that's kind of the main takeaways you should take away. So I just said that those are the main takeaways you should take away. That didn't even make sense. Those are kind of the key points you should take away. One thing I will mention is I really like looking to see if it's a model. And just to me, this does look like a buy model. So any bearish fair value gap I see in the way up, I would not really short. Even this one, okay? Would you short this one? No, you wouldn't. What I would do is I would have this marked anyways, and then maybe if we got a 1 minute short set up and it was good displacement, then I'd short it. But I'm not going to short this outright because I'd expect this high to be hit, especially because this is looking like a kind of a buy model here, okay? So make sure you kind of look what model we're in. Again, that's going to take screen time. See if we hit liquidity. See if the fair value gap is in discount, okay? If you're longing, you want it to be in discount. So as you can see, this one was clearly in discount. If you're shorting, you want it to be in premium. An example of that would be like right here. This fair value gap was in premium. And remember, when you're shorting these fair value gaps, the stop loss is always above the low or below the low or above the high. So if you long this fair value gap right here, let's say you long this one, okay, your stop loss is going to be under here. And there's ways to minimize that stop loss and risk because this is a pretty big stop in my opinion. If you're taking a 1 minute confirmation setup, then the stop is often going to be much tighter. So again, hope this helps you guys a little bit. Make sure to check for those 4 things. So see if you hit liquidity, see if there's equal highs or equal lows above or below. See if the fair value gap is in discount if you're longing, premium if you're shorting, and kind of look to see what model we're in, okay? All those things should help you overall kind of see where the market wants to go. And even like right here, a couple of weeks ago, okay, when we saw us bouncing off this fair value gap, okay, in live time, I didn't take this along, but I saw this, I was like, okay, after about these 3 candles, I'm like, okay, this looks like a higher time frame model. We bounced out a discount, okay, so where does the market want to, like for the model, that 2022 ICT model that he taught us, where does the market want to go when we bounce off a fair value gap like this with displacement? Wants to go to the previous highs. The previous high would be where? It would be right here. So this would be your target, and you end up hitting it that later that week, okay? So this kind of also helps me with my bias. If we're right here and I still don't know the bias, I'll check the higher time frame to see if we're in the middle of a model and we haven't completed yet, okay? So hopefully this video helps you guys a little bit. I think that's all I got for today. This did run a little longer than I thought, but again, I hope this helps you guys. Other than that, peace out.